Hi, everybody. This is Josh Jelinski, the financial quarterback, and we're with one of my favorite all-time guests, Mark Kohler, an MPRA, whatever that is. I don't even know what that is, but I want to know.
Masters in Professional Accountancy.
Whoa.
Super boring. Yeah.
How is that different than a CPA?
Well, I'm both.
You're also a CPA and an attorney.
Yeah, a few letters.
So, yeah, but what's the MPRA? Was that like before the CPA?
So, yeah, an MPRA is a master's. Sometimes it's called a MAC, Master's in Accounting, whatever. So I did a 4-year degree in accounting.
Is that like an LLM?
Yes, an LLM is for people in law school that didn't want to go get an accounting degree, so they kind of give you a dumbed down version. Did I say that out loud? Did I say that?
There you go.
Anyway, LLMs are cool. They're just for a different purpose. So I am a CPA as well. Yeah.
And he's the founding and senior partner at KKOS Lawyers, specializing in tax, legal, wealth, estate, and asset protection. Also, Kohler is dedicated to guiding clients through the complex legal and financial landscapes to achieve their American dream. He's also the founder of Directed IRA Trust Company. What haven't you done?
Well, I haven't climbed, Mount Everest yet. I'm trying,
do you really want to do that?
No, I had a friend actually do it this year, and I couldn't believe what he went through to prepare for it. But I got a few bucket list items, but they're not things like that, but.
Well, let's start with that. What are your bucket list items?
Oh, okay. I want to learn Spanish. So I've got a little bit of Rosetta Stone in me. I'm trying. Estoy aprendiendo español. And then I'd like to be, so I want to become an EMT, and I'd like to be Krav level 2. So Krav martial arts,
wow.
It's much more practical. Liam Neeson is Krav. In Taken, those were all Krav moves. He did a lot of his own moves.
What would you recommend people do right now listening to get their tax situation under control?
This time of year, this is game time. This is the fourth quarter. All they're doing on April 15th is reporting the score. Game's over December 31st. If you want tax strategies in 2024, you got to take action on so many different things. And there is so much money on the table. And Josh, you've heard it before. It's easier to save money than make money.
Exactly.
Holy crap. And so, okay, so let's get into it. I'll just mention a couple here that are hot button items. The S Corporation. Any of you that are small business owners, you got to be dialing in your payroll level. Maybe you took too much, too little. S Corporations are the #1 strategy for small business owners on Main Street, saving on FICA. We hate the F word. What the FICA? We don't want FICA. Bad stuff. And so, but that W-2 that you issue has got to have any 401k, solo 401k contributions. It's got to have your health insurance on it. You might do an HSA contribution. That W-2 that you kick out of your S Corp can save you thousands if it's done right. So that's a critical one. The one, Josh, that we're jazzed about, though, and we're helping so many clients with, is the family office. I don't care if you're a billionaire or not. Every business owner in America should have a family office. And when you have a family and you have a business, freaking A, you have a family office, and you should be having your board meeting during the holidays, writing off travel, dining, and meeting with your family, talking about money, talking about your business, your legacy, and what you want to pass on to your family. And not enough families are talking about it. And it's a whole freaking tax write-off, and it's good asset protection. So we just love that too. It's a great year-end write-off.
So how do you do that? Break it down.
First thing you do is make it legit. Let's say, back up. You got to have an LLC or an S Corp. Many of your followers are, of course, business owners. So do you have an LLC with rental property or investments, or do you have an operational entity? Maybe the side hustle, side gig, or an S Corp. Those entities, an LLC and an S Corp, they need to have an annual board meeting. It's called the annual minutes. So many people don't even do it, and then they wonder how they get screwed in an audit or bent over in a lawsuit. Maintain your entity, people. That one sheet of paper from LegalZoom 10 years ago, that's not an entity. Good luck. So maintain your entity, get your corporate book cleaned up, have a board meeting before year end. We charge $200 at our law firm and do it for thousands of clients. We give you a questionnaire. You sit down as a family and you just talk about money, talk about your business. All the kids should be on the board. Your spouse should be on the board. Now you can compensate them before year end and take a tax write-off. If you're helping your kids in college, paying your taxes and then giving your kids money, what the hell? Put them on the board, compensate them for being on the board. You took a tax write-off. They may have no tax bracket at all. That's another year-end strategy.
What do they do? What do they do on my board? What do I do with my 16-year-old, my 14-year-old?
Well, first of all, they're on the board giving advice and tips. A 14-year-old, 16-year-old, my 16-year-old was in the studio helping my team and teaching me how to run YouTube. In fact, this week I called my son, who is now in his, oh my gosh, I don't want to say it. He just turned 30. My son, he started 15 years ago with me at age 15, helping shoot video with me on YouTube. I had a YouTube channel in 2009, by the way. But just this week, I called him up and said, will you analyze these YouTube videos of mine? This one, something's wrong with them. And he'd help me out. Your kids that are 14 or 16-year-olds, they're better on social media than you, Josh. Holy crap. Get them involved in video, audio, social media, cleaning the office, working on the rental property, helping at the board, talking about the future of the business. And that's compensationable. I mean, you can pay them for that.
You hear that about the S corp, though. I want to ask you on the S corps for a second. Break that down. So I go to my accountant. I say, "Hey, give me an S corp." I know you can file it with the state, but
So many accountants screw this up. And I'm sorry for you accountants out there listening. I'll go toe to toe with you. And I don't say that out of meanness. I say it out of I can help you be a better tax advisor. And we have our Main Street Tax Pro program. We'll probably talk about it for a minute. But first, if you're an LLC, everybody listening, LLCs, limited liability companies, do not save taxes. They don't. And for some reason, people think I got to have an LLC. I'm starting a business. I need an LLC. No, you don't. No. An LLC gives you asset protection, legitimacy, an EIN, a bank account, a way to start tracking your income and collect it and pay your bills, and saves you being disorganized and give you some asset protection. But it does not save you taxes. I don't need an LLC to take a write-off. And at the end of the day, if you make 50 grand, 100 grand, whatever you make in your LLC profit is taxed at 15.3% self-employment tax, FICA. Well, when you convert to an S corporation, you can split up that income on paper. You don't have to wait around for a paycheck. I know business owners, your income's up and down, cash flow, whatever. But you're going to take a report at quarterly and at the end of the year and say, all right, I made the same 100 grand. I just converted to S corp. I made the same 100 grand. I'm going to take 40 grand as payroll and 60 grand as distribution. You took the money out all year long. Don't care. But on paper, it's 40 payroll, 60 draw. That means I just saved 15% on $60,000. That's 9 grand. So I just saved $9,000. This is every dentist, realtor, attorney, accountant, financial advisor, entrepreneur, anybody making 50 to 100 grand, you're a candidate for an S corp. You can either pay 15,000 or you can pay 6. You choose. But if you don't do it before you're in, it ain't happening.
so you do the S corp. That's number one. Number two, do
Board meeting.
do board meeting with your kids.
So board meeting's number one, because we're going to write off travel and dining and during the holidays. My Thanksgiving dinner was a write-off. I don't know about yours. Okay. I used the corporate account to pay for food for Thanksgiving because we had a corporate board meeting after Thanksgiving dinner. That's legit. Take notes. Get better asset protection.
Yeah, what if my kids and wife don't want to do this at Thanksgiving?
Oh my gosh. Okay. Should I tell I'm asking my studio guys, should I tell my story? This goes back at least 8, 9 years. And this is when my son, who I just referred to, is probably 21. My teenage girls are about 18, 17 or 18. My daughter, Molly, is about, let's say 13, whatever. So I go to this is my exit now, but go to my wife at the time and say, hey, we're going to do a family board meeting up at Jackson Hole. She's like, no, don't screw up a Jackson Hole trip with a board meeting. I'm like, honey, this is powerful. It's going to be awesome. She's like, no. I go, you got to trust me, please. And I'm begging her. We're going to have a family. We're going to go up to the Silversmith Hotel right there in Jackson. We're going to go to Bubba's. We're going to do Bar J. We're going to run the river. It's going to be great. I just want 2 hours. Now, in her mind, she envisioned us all going into the hotel room, sitting around a bed and fighting. You know, that's what families do, right?
Yeah.
Everybody's just going to fight, and the kids are going to be like, and she's like, no, that's not we don't want to do that. I'm like, trust me. So she's like, all right, fine. So I call up the hotel and I go, hey, I want to reserve a boardroom for the morning of whatever, Friday or Saturday, 3 hours. So like, all right, you get the Alpine room, second floor, whatever. So we get to the hotel. Kids are walking in with their roller bags. Marquee says, welcome, Kohler Board of Directors. Kids are like, what the hell's going on? Okay. And I had at the front desk a portfolio with a name tag, welcome to the Kohler Board Meeting Conference.
Mm.
And I had an agenda and it was the whole 9 yards. And the kids were like, what the hell? This is part of the plan. You got to treat it legit. This is not ordering pizza at halftime during the Super Bowl. Okay. So we make this thing start to happen. I go, you're going to be in the Alpine room at 9 a.m. No breakfast, no this. I'll have food in the room. If you miss this meeting, you are not running the river on Snake River at noon. They're like, okay, okay. So 9 a.m., all the kids, I get up at 7 a.m. Josh, you would have loved it. I had like PowerPoint set up, a projector. I had little table settings for everybody. I had books that I bought for each kid. Richest Man in Babylon, Rich Dad Poor Dad. I had that all little set of books that they're going to take home. We're going to do homework. I had a little all set up, and my girls were like Instagramming the hell out of it. They're like, And so we get it. They walk in and they're like, oh my gosh. And we sit down and I go, okay, we're going to talk about the trifecta. We're going to talk about my business today and where it's going, what we're doing. And I want to talk about each one of your businesses because I was teaching all my kids, you got to have a business before you go to college and before you get out of college. No student debt. I don't care what your grades are, but you're going to have a business. So they all had little business ideas. We're going to talk about getting out of debt. And each one of our kids, we were starting a Roth IRA. And I said, for every dollar you put in, I'll match it. We're going to do Roth IRA. So we were watching a little Dave Ramsey video, this and that. Josh, within 15 minutes, my wife's like, oh, this is cool. And now we were an hour in, and my daughter says, Dad, can we skip river rafting and keep doing this? You go across the country and you help so many people with business, but we want to talk to you too. I'm like, holy crap, I take you everywhere. But she's like, but you're talking to us. And my kids were like, we can't get enough of this. They wanted to plan out their Roth and how much could be in it. And I got a small business. And what's this? And what's that? And what am I doing with this book? We pushed off river rafting 2 hours because the kids were having so much fun talking about money because families don't talk about it and they're starving to talk about it. And if our spouses don't catch the vision, we got to push through and show them how amazing it is. And the whole damn thing was a write-off.
Wow.
And I've just pulled one of my cheat sheets here because I've got 20 year-end tax strategies, but I'm going to pick off my top 12. Okay. So number one, S Corp. Number two, board meeting, which includes travel and dining during the holidays. We got to pay your kids. Now, you mentioned the next one, Josh, because if you're paying your kids, one of the strategies is opening a Roth IRA for your kids. But you can't open a Roth IRA for your kids, which you have until April 15th. But if you don't pay your kids before January 1st, you can't open the Roth by April 15th. So they go hand in hand. So I'm going to say strategy number 4 is making sure that Roth IRAs for the kids.
Wait, what was strategy number 3?
Number 3 is pay the kids. So I want you to take a tax write-off. If you're paying for your kids' school, soccer, football, music lessons, stop it. Your kids don't pay taxes on the first 14 grand. They have their own standard deduction. So pay your kids for helping in the business 5, 10, 2 grand, 20 grand, whatever. Pay your kids for working in the business. You get a off the top tax write-off, and your kids half the time aren't even paying taxes. That's just one strategy. But you can't say you did it. You have to do it. This is how you launder money. You actually have to move the money. Okay, so anyway, so pay the kids is number 3. Then set up Roth IRAs for the kids is number 4.
Okay.
In my top 20, since we're there, I'll just say it right now. I'll combine them is chunking at your own retirement accounts. I call it chunking because you have maybe an IRA or a traditional 401k. We want that money in Roth. In the long run, you will always win with a Roth. And we know that tax rates will go up. Social Security is too much of a disaster. It will happen. So we've got to be ready to have that tax-free ATM in a Roth IRA ready to go. And you can contribute to a Roth at any age, any income. It's called the backdoor Roth. Well, in order to do the backdoor Roth, you might have to chunk as some of that regular IRA, traditional or 401k. Well, I don't want to kick in the next tax bracket either. So there's 2 areas in the tax brackets where it jumps up 10% or 8%. And we don't want that. So we're going to keep you under those brackets by chunking at your traditional to get you to Roth, which brings us to the mega backdoor Roth. So if you're an entrepreneur and have a solo 401k, we can put over $76,000 in a Roth IRA this year. Now it's a combination of a regular IRA and 401k, and that becomes the mega backdoor Roth. I know you're familiar with it, but listeners, you want to sock away money. This is what we help the wealthy do. You can do it.
Yeah, so many people don't do that who own a business.
Yeah. And I didn't for so many years, Josh. Many business owners, if you're many of you were like me, you just put money back into your business because you bet on yourself. You're like, I'm my best bet. So I'm not going to put it in the stock market or crypto or in real estate. I'm going to put it back in my business. But that's a fallacy. We need to just peel off 5 or 10%. I'm going to just peel off a little. I'm going to park it somewhere else, a rental property, crypto, arm in the market, whatever. But when we put all of our eggs in our basket of our business and something goes wrong in our business, it's it's devastating.
Oh, totally. And I mean, you've helped thousands of business owners. I've helped thousands of business owners. How many stories have you heard? And this is why I think I would even say take 15% out, pay yourself first every year in these vehicles. How many times you hear somebody says, you know what? My accountant ran off with my money. My business partner ran off with my money. I've never heard any business owner say, my accountant or business partner ran off with my 401k or my pension or
Yeah, yeah.
my solo backdoor Roth. There are so
My
many good
rental property.
accountants. So I'm not casting aspersions on the industry. I'm just saying a lot of people get screwed by their business partners.
And a lot of people would have never made anything without a business partner. I think, and I'm with you. And so we've got to be peeling off money for all sorts of risk and even just market risk, industry risk. Who knows what? Look, we could count 10 industries that are gone that existed 15 years ago. And so we've got to be able to move money and set it aside for other future ideas and opportunities as well.
Yeah, with the stroke of a pen, Congress can create some law that would bankrupt an entire industry.
I'm with you. All right. Now I've got 5 on the table. I'm going to throw out 3 real quick here: the flexible spending account, the health savings account, and the HRA. These are all 3 medical strategies that have to happen now. So the flexible spending account, some of you may have one, or your spouse at work, is to use it or lose it. Your employer might give you up to $1,000, $3,000 is about 3,500 is the limit this year. If you don't turn in your receipt by the end of the year, most of the company's plans done. There is a makeup that can last up until March 15th, but you don't want to plan on that. Find out what your company's rule is. Turn in the receipt. It's free money. You're not taxed on it. It could be eyes, dental, copays, acupuncture, physical therapy. Go to publication 502. That's IRS publication 502 for any medical expense that would qualify. Number 2, health savings account. Best kept tax strategy, best kept secret. I love it, the HSA. I think it's arguably better than the Roth. You get a tax deduction on the front page of your tax return at any income, any age. It grows tax free. You can self direct it and you can pull it out at any age. It's like a Roth on strategies for medical. And the number one reason for bankruptcy in America are medical expenses, and it's the number one cost after retirement. So we need to be building these health savings accounts. Well, guess what? It's enrollment period right now. And if you don't enroll for the right type of health insurance, you don't get to have an HSA next year. So you've got to be enrolling right now, and then it's game over come January 15th. So I got to be getting into that right now, the HSA.
Yeah,
The
when you're
fourth,
with your HR, make sure you have one of those HDHP plans. It has to say that on there. High deductible health plan. Because I don't know, when I see mine, you get like 20 choices, you forget them. Sometimes you pick the cheapest, sometimes you pick the one with the best benefits, but you need the one with the HDHP.
yeah, nope, totally agree. Now, and we could dive deep into any of these people. I've got podcasts on each one of these topics. I know Josh has had podcasts just dedicated to these topics. The next one is the HRA, Health Reimbursement Arrangement, sometimes referred to as the 105 plan. Now, these are just for small business owners. There is a 105 for companies that have employees, a version of it. But I'm just going to say this: the HRA for the small business owner is a way for you to write off 100% of your medical and still have an HSA. Your spouse may even have an FSA at work. You can have all 3. But medical is a big deal, and people don't realize how much you can write off with medical if you use the right platform. So learn about the HRA. You've got to do the reimbursement inside your business before the end of the year, or you miss it.
Who sets up the HRA? You don't hear about that one that much.
It's not talked about enough, that's for sure. It's in my book, Tax Legal Playbook. People, get over there. Okay, now here's another one that you don't need to do before year end: the BOI report. We were all getting ready. We filed thousands of these this year. This was under the FinCEN, the Texas ruling in federal court last week. where the federal government put a automatic stay, or I should say a restraining order, temporary order, that no more filings of the BOI report until the Supreme Court hears this. Now, we could get into politics. Will it be heard? Will it not be heard? Who knows? But the point is, we don't need to file that BOI report before the end of the year. If you did, you're a good citizen. If you're a procrastinator, I just enabled you even more. So don't do the BOI.
So wait, so you should not do the BOI if you haven't yet.
Yep, correct. Do not file. And it's federal law now that you are not required to file. You can go to the FinCEN website, everyone.
Yeah, I gotta start hiring your people too, because my attorneys, they charge me all kinds of money for this. It was a big scam. I'm looking to hire KKOS instead of my attorneys.
Thank you. And on that note, everybody, our Main Street business, our sister company to our law firm, we charge $200 to do your annual minutes, make sure you're good with the state. And if you need a BOI report, we do it. $200.
That's great.
That's
That's
it
good.
per company. So if you're going to do 2 or 3 board meetings this year, we charge you $600. We'll give you all the paperwork to go have your board meeting, bring it back. We'll type it up, make it look pretty. You're done.
By the way, I'm not plugging you because I haven't used you guys. I called you once, and yeah, you were very reasonable. And yeah, what about people like me? I have this highfalutin, big city law firm. They're charging too much money for this type of stuff. It's like for that $200, I think they've charged me like 2 grand. I got to call your people.
Well, yeah, thank you. And just even an estate plan. Our estate plans are between 2 grand and 2,500. And that's a will, trust, powers of attorney, revocable living trust. We see what Rupert Murdoch went through this last week. And the revocable living trust is a mainstay for so many people. But I, yeah, and there's lawyers out there who charge 10 grand just because the client can pay it.
And I like the $200 a year plan because most people, they don't do their minutes. Most business owners don't keep minutes. What? I'm supposed to do minutes? That's why, my attorneys do the minutes because it's like, it makes sure it's done every year. Somebody's getting paid for it. They do it.
The next one I'm going to throw out, number 10, is, and we could combine a couple here. I break these down in more detail, but buy a vehicle before year end. Some of you that are thinking, hey, I'm in the market for a new vehicle in January, you might as well pull the trigger before year end, especially if you're going with actual method, not mileage. Now, if you're a realtor putting on a bunch of mileage, I'm not going to care when you buy it. But if you're a dentist or an influencer or in an office where you're not putting on a lot of miles, but you have client meetings and some travel here and there, we probably go actual. And especially if you're a real estate investor with an SUV or a truck. So the vehicle deduction is alive and well. It's amazing. And I will piggyback this with equipment. Any of you that need to buy new electronics, printers, copiers, machinery, anything equipment wise at all, even if you put it on a credit card, we can take the tax write off this year and you can pay the bill in January. So let's accelerate some of those write-offs if you're in the market. But let's not let the tax tail wag the dog. If you don't need a new freaking widget, don't go buy it. Buy stuff you need.
And that was the genius of Elon, too. Another kind of, people go, why are so many people buying cyber trucks? They're ugly.
I don't know. I'm on the list. What the hell? I think they're pretty cool.
Well, hey, the GVWR rating, right? That was brilliant by him because a lot of people can't take the electronic vehicle deduction like they used to. So then they put a 6,000. What is it? 6,000 pounds GVWR, gross vehicle weight rating, or whatever.
Well, okay. I'm glad you brought this up. This is a really good point.
Because that's a huge little thing people don't realize.
Yeah. Here's the trick. This is a loophole. And we've talked about it in some of our. I'm glad you brought this up. I wasn't going to bring it up. Okay, but let's just talk electric vehicle for a minute. Then you're talking about the 6,000-pound vehicle,
Exactly.
weight, which is SUV, truck, blah blah blah. The bonus depreciation, insane. So whether it's electric or not, that's a great vehicle deduction strategy. But the vehicle write-off under the Tax Cuts and Jobs Act was the best since 1987. So it's still incredible, even with a luxury auto, not even that weighs 6,000. Okay. Electric vehicle. Josh, you're right on. If you try to take the individual or personal electric vehicle tax credit, if you make more than 150 grand or something stupid, you don't get it. No one gets
you don't
it.
get it anymore.
The only people that can afford those electric cars are wealthy people, and you don't get the credit if you make too much. So it's stupid. unless the loophole, the commercial electric vehicle tax credit has no income limit. So with a client with an S corporation, back to the S corp, baby,
Yep.
I put the electric vehicle in your S corp. Even if you personally are on the hook for the loan, I book it as a company vehicle. So now I get the electric credit and I can go do the actual or mileage on top of that. So make sure your S corp owns it and you can bypass that whole income threshold issue.
That's a good tip. Talk about that 6,000 thing. People don't understand that.
When you write off a vehicle in your business, and everybody under misses so much opportunity here. There's a fork in the road at the top. You can either do mileage or you can do actual. You got to choose. And every vehicle in your household is going to be one of those two. So vehicle, mileage, or actual. Now, under actual, you have owning and leasing. And those are two subcategories. But if you go mileage, I don't care when you bought it. I don't care how much the vehicle weighs. You're going to do mileage. And anybody in a business that's burning a lot of miles, you're generally going to go there. That's a good thing. And what's probably this year right now, you're at 67 cents a mile. So you put on 10,000 miles, you're at 6,700 write off. That's going to be bigger than your gas because you don't get a write off a loan payment. And so, whatever. So mileage is awesome. If you go actual, if it weighs less than 6,000 pounds, then there's limits on how much you can write off. And they're still good. And they're better than they've ever been, but they will phase out based on the cost of the car per se. And if they don't, but where the top comes off, no pun intended, convertible, when the top comes off is when it weighs 6,000 pounds or more. Because the government's going, all right, if you need a truck or an SUV because you're hauling crap around, we're going to let you write it off as a piece of equipment with no depreciation caps. So that's where you can go out and buy a Ford F-150 for 50 grand. And if it's 90% business use, I'm writing off 45 grand on December 31st. I get clients calling me on December 31st all the time from the dealership. Hey, I'm down here. I'm going to buy a truck. I'm like, have you seen the gas mileage? Yeah, I don't care, but I need a write-off. I'm like, do you really need a truck? No, then don't buy it.
But that's what's nice about the Cybertruck now.
Well, yeah, but you need a Cybertruck. I mean, because they're cool.
Because now you can haul your junk in the Cybertruck and you don't have to spend money in gas. That was brilliant by Elon.
Yeah. And again, you're cool. You know, if you want to be part of the cool kids.
Are you really in the reservation line for one?
Yes.
They do look cool. My friend drove me in one.
Yeah. Well, what I want to do with them is you wrap them. You wrap them in black.
Oh, yeah.
Or some other colors. They're pretty cool if you wrap them. The silver's nice too. But anyway, no, I got in line for the 2-engine model, and those haven't come out yet. And so I've got my cyber mug with my reservation number, and I'm still probably out another year because I want the 2-engine model, which gives you like 400 or 500 miles distance. And anyway, okay, number 12, or in 11 and 12, I got to do 11 and 12 here. I'm going to say RMDs. I know that's not sexy, but America's getting older. Life expectancy is longer than it's ever been. And if you're 73 or older, you've got to start doing RMDs. And so this could be for your parents, your grandparents. If you don't do your RMD, required minimum distribution from one of your IRAs to cover all of them, by the end of the year, the penalties are off the chart. And you know this, Josh, in the finance world. So I tell people all the time, make sure you're hitting the RMDs for your family members that might need it. Very important. And I'm just going to throw out one more on charity. Yeah, it was that time of year. It's Christmas time and charitable giving. And what I've liked lately is with the donor advised funds. Because if you don't know where you want to give the money yet, but you know, or maybe you tithe, maybe you give to your university, your alma mater, or these donor advised funds are nice because you don't have to go out and set up a 501c3 and figure out all that crap. We do them at our office, which is fine. But the donor advised funds, I can take the tax write-off right now and then decide where I want to deploy that charity money next year. And lots of options there. So you don't need a receipt for anything under $500. I stopped at Goodwill on the way here to work today. I was throwing stuff out. And if it's under $500, you don't need a receipt. If it's over 500, just grab a receipt. And for those of you that are still itemizing, that's a great write-off. So do your charitable write-offs and before year end. I got a few more here, but there's my 12.
There's your 12. What are your few more?
What?
You said you got a few more here.
Well, um, okay. I'm even going to go back to the S corp. For any of you that are in LLC and you've been in LLC all year long and you made more than 50 grand, you can do a retroactive S election. You include a special letter and a rev ruling, and when you send it off, you can convert that LLC that was going to pay tax back to an S corp to 1/1/24. With the rev ruling election, you can get around the 75-day rule. So a lot of accountants miss that. And this is a great opportunity for any of you out there that have an LLC, again, with 40 or 50 grand in profit. We could save you 3 or 5 grand just right there by making that S election. Now, it's super expensive to convert to an S corp. We charge $250. I know it's highway robbery, but if you want to save several thousand, it's hard math. Spend 1,000, save five. Now, work with me, people. I know it's hard. Spend 1,000, save five. No, Mark, I don't get it. I don't get it.
Let's go back to retirement plans. That's one of these things people don't do as much. Do you like defined benefit pension plans, cash balance plans, all those things?
I do for the client that's already maxed out their individual Roth, done their solo 401k, bought their rental property. They're out of debt. They've got 3 to 6 months of reserves. Their business is healthy. Then let's go play with the big boys. But what happens is some financial advisors start selling DB plans to everybody that's got a pulse. And some of these people cannot maintain it, should have never done it, and they've got other financial carnage in their life. So let's make sure it's the right fit. And this goes back to IUL. IUL is great.
Yeah. IUL. What is IUL for people just who don't know what it is?
IUL stands for Index Universal Life. There's variable VUL, variable universal life. These are cash balance type life insurance policies. And anybody that can think of any creative way to twist it into bank on yourself, loan to yourself, build it, yeah, they're going to come with some twist. And at the end of the day, it's freaking life insurance. So, and that's fine, but you need to be able to get past all the crap in marketing to go, okay, I'm buying a policy. I don't want it to mech out. That's a rule that means you can't put too much in the cash versus the insurance portion. But it's basically a term policy married up with a cash value fund. And they're great. And they work on paper great if the client can stay the course and they can make the premiums and they can handle it. But again, they get sold. I bought one when I should have never. And the person that sold to me should have known better. And they didn't. And so it lasted about 5 years because once I couldn't make the premium, the thing starts to go into disarray and crash and burn.
I'm not a big fan of IUL. I'm more of a fan of the straight old dividend paying mutual whole life because there's no rising cost of insurance. But with an IUL, you could lower the death benefit
Yeah, you
to
can
lower
do
the
that.
costs.
Totally.
So if you can't afford it, you just lower the death benefit. Lower the premiums, lower the drag on the policy. I like whole life. When I say whole, I mean dividend paying ordinary life from a mutual company because it's very hard to screw up. And human nature is you screw things up. So I'm not opposed to IUL, like if it's funded properly and designed properly. But when you fund IUL like it's IUL the right way, it's very similar to a whole life. So why not just do the whole life? Because there's no rising cost of insurance. My biggest problem with IUL is the caps can change every year, the fees can change every year. The insurance company rise the cost of insurance. We're with, my policies that I put on my own self. I get a 6% dividend. They never increase the premium. If I can't make the premium, I just make it a reduced paid up policy. I don't know.
Yeah. And I think any of you that are out there talking about life insurance and you're at that stage in your life where you're going to use the life insurance as a retirement vehicle other than just death benefit, that's when this conversation comes up. And you're going to look at VUL, IUL, whole life, all of it, because all of them are a little different based on your health, your age, what's your goal, what else is going on. And sometimes it's the best thing for someone that does not want to worry about investing in the stock market. They don't have time. They just want to keep it simple. La 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 la. Well, that could be a whole life policy could be great for them. Other people that want to get engaged in their investing and be involved and self-direct and get 10, 20% ROI because they're highly involved in their investment portfolio, they're going to go nuts with life insurance. because they have no, they're going to hate it. So you have to find people. You have to not do what the crowd's doing. Find out what fits you the best, and and there and insurance plays an important role in that mix.
Yeah, to me, the beauty of life insurance is that permanent death benefit, the instant estate, 10 million, 20 million, 30, 40. That boom, if I drop dead, my family's covered and I got a muni bond on steroids. If you're in a high tax bracket and you're making 4-ish, 6-ish%, you'd have to make what, 6 to 9 to beat it on a year and year. And I'm involved I have stocks, I have ETFs, I have real estate. I just like that it's like the little engine that could. It's like a very stable thing. I can loan money out if I really needed to. It's funny. The people that I know that put like big serious money, like $1 million a year premiums, none of those people ever loan it out. Um, that's the only problem I have with bank on yourself. I like the options to take money out if opportunity's there. But most people I know don't really take money out of their policies.
I like what you said too. It's there, the little engine, but you have this other stuff. See, life insurance is a piece of the equation. It's part of the plan. It's part of your portfolio. Whenever an agent goes out there and sells it as the get all end all, and holy crap, I see people draining their 401k with penalties and taxes to go fund some freaking life insurance policy. I think it's criminal.
I think they complement. You max out your 401k, you max out your life insurance after. To me, as an entrepreneur, the thing I love most about life insurance, it's kind of the strangest thing because nobody ever sells it this way, is I like the idea that for pennies, you can get dollars of death benefit. So that as an entrepreneur, you're taking risks every day with your business. You're the ultimate small cap stock in a small business. I'm taking so much risk there that I like that, man, if I die, my wife and kids get millions of dollars coming in.
Here's a twist though. At some point, you're going to be self-insured. I mean, if you're a successful business owner and some people get there, some don't, but at some point you're like, oh, I've got a net worth of 5 or 10 million. I'm not doing too bad. I've got great cash flow here with my real estate. I got this, I got that. All of a sudden you're like, do I really need that death benefit? And now you're like, oh, I don't. But sometimes they don't have that policy and someone comes along and says, oh, you need more life insurance. No, I don't. And the only people that can afford those big annual premiums are the ones that are self-insured. And then they put the money in, like you said, and they never borrow it out. I'm like, what the hell are you thinking? So it it's tricky.
I don't need my life insurance anymore, but I like it. It to me, knowing that millions of dollars will go to my wife and kids, it allows me to take better risks with my business. I don't know.
True,
To
too.
me, it's like a economic principle of certainty. How many small business owners they sell for 20 million, 10 million, 30 million? They sell their businesses. And then they go, Josh, I'm sure they've done this. They all regret it within a couple years, right? They sell to some private equity firm. I liken the insurance to, you don't need to take that $20, $40 million payday from a private equity firm. The insurance company will do it for you so you can still run your business, get write-offs. You know what I'm saying? It's more to me a conceptual thing than an ROI thing. Your ROI, your best ROI is going to be in your real estate, your stocks, your crypto, your business, right? To me, it's like a turbocharger. I liken life insurance as the turbocharger to an engine. Your economic engine is your ability to earn income, right? It's not life insurance.
Well, there really are several purposes and reasons for life insurance. And when you're out there in the market, you've got to make sure you understand and own what your needs are and what you want. And what Josh's needs and wants are going to be different than mine or some listeners here. And that's why the insurance industry is so crazy too, because there'll be a policy for you. Like whatever you want out there, they can design one. And that's okay. It's cool. Once you've checked all the other boxes, I just believe that there's some things you need to do to be stable economically that are just sound and careful. Looking at your debt load, your mortgage on your own home. I'm not saying pay off your home, but where are we at on that? your cash flow as an individual.
So, crypto taxes. I have a bunch of questions on, I mean, as we're like three quarters way through the interview. Bitcoin taxes, crypto taxes. I had a client the other day said, I don't want to sell my crypto because they're going to change the rules next year. Do you believe that?
Change the rules and not tax it?
No, I don't know. They're
What the
talking
hell?
about some new tax regime for it.
Hell no.
Have you heard about this?
And, yeah, I've heard the wish list of on Discord and the crypto community that thinks they're special. Hell no, that's not going to happen. We're trying to create tax cuts in America right now, and we're just going to all of a sudden not tax crypto for some reason. See, where the government giveth, the government taketh away. So if the government wants to give, and we want Donald Trump to come in and renew a lot of the Tax Cuts and Jobs Act, which will help you, crypto investors. That's a good thing. We don't want higher brackets. We want bonus depreciation. We want a whole host of the 199A strategies, a whole host of things that you want. And then you think we can get that and reduce our income because tax revenue has to come from somewhere, and we're going to somehow not tax crypto gains? Come on, you're kidding yourself. And I have crypto. I love it. So I just want to say one thing though on this before we continue, and you drill down on this. I've held 3 national crypto tax summit conferences. I know how crypto's taxed backwards and forwards. But the one thing everybody's got to realize when you just said it, so don't be offended when I call you out on this, there is no crypto tax. There's no crypto tax. Crypto is taxed just like stock or real estate. You have a gain, you pay tax. You're going to stake, you're going to get taxed. You want to go mine, you're going to get taxed. I mine, I stake, I have gains. If I don't do it in my Roth IRA, I'm going to get taxed. So you decide. So there's no crypto tax. You're not special, people. It's an asset. You tax if you sell it.
And how is it taxed? Long-term capital gains, short-term gains?
It depends. Yeah. See, there's 2 pieces of this. First, how is it taxed? It's either going to be, there's 3 main taxes we're worried about. Let's start with long-term capital gain. If you hold any token or coin or an NFT for at least 12 months and then sell it, you get taxed at long-term capital gain rates, which are lower rates. That's great. Some people say, I don't want long-term capital gains. Oh, yes, you do. So some people think it's regular tax plus capital gains. No, 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 no. Capital gains takes over if you held something more than 12 months. Capital gains is what you want, people. Okay, then there's short-term capital gain. You held it less than 12 months. You bought Tesla stock. You held it less than 12 months. There's a gain. You pay short-term capital gain. Now, short-term capital gains are guess what rate? Whatever bracket you're in. There's no special rates for short-term capital gains. It's whatever next dollar you're going to get taxed at. The third type of income in crypto is ordinary income. Again, staking, mining, any of these types of income where your crypto is earning money for you. Maybe you're doing something in the metaverse. Maybe you're creating NFTs. So now you're going to have an ordinary tax working in the crypto industry. Now I said there was 2 things. Let me say the second. A lot of people think, well, I've got crypto, but I haven't turned it back into USD. You know, I got Bitcoin, then I switched to Ethereum, then I flipped it over to Solana. But when I bring it back to my wallet in USD, then I'll get taxed. No, you get taxed when, 1, you exchange a coin for another one. So if you exchange Bitcoin for Solana, you're taxed on the gain you had during that time period you held Bitcoin. Number 2, you're taxed if you sell it and go back to USD. Number 3, if you use your crypto to buy something, that means you've sold it. That means you are paying tax on any built-in gain. So you exchange it, you sell it, or you use it. You're going to get taxed, people. There's no special rules for crypto. It's a freaking asset. Think of it like stock.
You know, what they don't realize is all this stuff is trackable.
It's the blockchain, people.
Yeah, and the 90,000 IRS auditors, what do you think they're doing?
There's a whole task force on this. It's public. And you check, that's the first question on the 1040. You know it. The first question on the 1040, did you buy, sell, exchange, or receive any cryptocurrency this year? Check the box. If you don't, penalties of perjury. You're going to jail. Well, they're not going to see it in my MetaMask wallet. The hell they're not. They're going to see it. What do you think? You're special? So just deal with it, people. And it's wonderful. Now, me, I bought 50 grand of XRP in my Roth IRA. It has 5x'd in my Roth IRA. I'll never pay tax. So people, if you don't want to pay tax in crypto, don't buy it in your own name. Buy it in your Roth IRA. Buy it in your Roth 401k. All my IRAs are in Sol and XRP right now. That's just me. Don't go buy it, people, because I said it. That's what I do. DIY, do your own research.
Now we're going to change subject to 2025 taxes. What changes should people be made aware of coming down the pike that you think will happen with the Trump administration?
This is Terminator 2. We already know what Donald Trump did with the Tax Cuts and Jobs Act and on the entire campaign trail. He said, I want to do the same thing again. So there should be no surprises. We're going to see an extension of most of the Tax Cuts and Jobs Act provisions. The same tax table rates, the same bonus depreciation extended, 199A. I hope we can get back opportunity zone. We're going to see all sorts of little tax tips and strategies that came along with Tax Cuts and Jobs Act that are expiring at the end of 2025. We should see them extended in 2026. Now, with that said, if you never want to eat a hot dog again, do not go to a hot dog manufacturing facility. You do not want to see this while it's being made. And so when people go, Mark, what's going to happen with legislation that's saying, I don't know. I'm not even looking. I'm not been asked to testify on a Senate committee. I'm not a lobbyist. And so I have no control over this. I just elected the man that I think is going to get us the best result for Main Street Tax America. So go knock it out of the park. I mean, I know some of you don't like Donald Trump or you voted for him just because you had to, whatever. But the point is, he's the player on the field now. I'm still a Vikings fan, but I got to root for the quarterback. I may not have been picking the quarterback, but he's on the field now. So I got to root for him and say, go for it. Make it happen. Because I would say this to all business owners. The future has never looked brighter. It is the time to invest, time to grow, time to get out of debt. It is the excitement is, have you seen it, Josh? It's kind of fun. I feel like it's the 80s again. The commercials are different. Just in 6 months, the commercials have changed. It's like Bud Light commercials are back to being Bud Light.
Yeah, maybe we won't go woke anymore.
Yeah.
It was funny. You know what? We did a thing on this in the podcast. We did a whole segment on Jaguar. Jaguar's woke. So it's funny, like everybody went woke. Now they're going non-woke, except Jaguar. Their commercial has this androgynous looking, model and the most DEI type car out there. Although it does look cool. Except they got rid of the Jaguar.
Live your life. Do what you want, people. Just don't tell me what to do. And I'd like to have a great economy. And I'd like to be able to start my business and run with less regulation. And anyone that is a little more liberal that has a business, they want the same thing. So I just hate it getting shoved down our throats by the deep state and the war machine and big pharma and all that. It's like, let's just get back to Main Street America.
Anything more for 2025 do you think that our people should be made aware of?
So many people think I've got to find the right accountant and then I can forget about all this. No, you will never find an accountant that's going to care about your taxes and your future and your journey and your tax return more than you. You've got to be engaged in the process. You've got to captain your ship. Now, what I've been consumed with is helping build the Main Street Tax Pro network certification. I've now got an army of almost 1,000 accountants around the country that meet with me weekly. We've got 12 modules, 80 topics, a community where we network and collaborate and find the best strategies for small business owners. And if you want to get to that network, go to markjkohler.com. Look at the network. You can interview an accountant that speaks smart Kohler. I don't make any money off that relationship between you and your trusted advisor. But what I'm telling you, though, is you got to have a tax advisor, someone that gets it. And they want to meet with you quarterly. They want to plan with you. Just dropping off your crap once a year and thinking that's good tax planning? No, it's not. And so any of you that have made it through this podcast and you're listening to us now talk about tax planning, God bless you. You're on the right track. You need to go out and recruit 5 other people that aren't willing to listen to a podcast like this and say, wake up. Because if you want to control your own destiny, this is the topic. Number one cost in your life for taxes. You want to go meet a rich person? You know what they love to talk about? Tax planning. They do because they get it. That's what moves the needle.
Exactly. Thank you so much, Mark J. Kohler. Check out his podcast. It is called The Main Street
Business podcast.
The Main Street Business Podcast. Subscribe to it on Spotify, Apple, and be sure to follow Mark on X and also go to Mark J. Kohler. Check out Main Street Tax. I'm excited about that.
Well, thanks so much, Josh. You're awesome. I'm glad you had me here. Wish you the best. I love your message. Keep giving it loud and clear.
Thank you. Thanks for coming on.
Thanks.